Welcome to the Mastering Commercial Real Estate Podcast, the show where we dive deep with top investors, operators, and industry pros to uncover how they're building wealth and creating real impact through commercial real estate. I'm your host, Cory Mortensen, capital raiser, commercial investor, and founder of 19 Holdings. Whether you're just getting started or looking to level up, this podcast is your go-to for real insights and actionable strategies. If you enjoyed the show, please hit that like button, leave a quick review, and share it with someone who should be listening. If you've got feedback or ideas to improve the show, I'm always open and I want to make this better for all you listeners. If you're ready to start building wealth passively through commercial real estate, visit 19holdings.com. That's ONE-9 Holdings to learn more and join our investor list. Enjoy this episode. Hey everybody, and welcome back to the Mastering Commercial Real Estate Podcast. I'm your host, Cory Mortensen. Today, I'm excited to sit down with Harrison Hoy, Director of Acquisitions at Cantrell Investment Company, where he leads deal sourcing, structuring, execution for a diverse portfolio of real estate investments. Harrison's career journey spans from tech startups to top brokerages like Marcus & Millichap and Partners Real Estate, and even into banking and loan origination at Santander, giving him a 360-degree view of the acquisition process. This episode will dive into how he evaluates markets, structures deals, navigates the complexities of acquisitions in today's real estate environment, as well as his background and a lot of the lessons that he's learned. So whether you're an aspiring investor or a seasoned pro, this conversation will provide a ton of insight into what it takes to source and close profitable deals. So Harrison, thank you so much for being on today.
Yeah, man. Thanks, Cory. I'm really excited to be on here and help get it going again and really just dive into it.
Yeah. So for everybody that is listening, give them a update on who you are, where you're from, how you got started in real estate, and bring us up to date to where you are now.
Yeah, absolutely. So originally I'm from South Florida, actually in Miami. The quick background context is my whole extended family is from Dallas, but my dad, being in multifamily development, he ended up going down to South Florida where I was born in Boca Raton, because I think JPI opened an office down there. We ended up moving a little bit further south to Miami, kind of like the Coconut Grove, Coral Gables area. My sport was sailing, actually, believe it or not. But yeah, I mean, and then I think kind of the early 2010s or so, we decided we wanted to be closer to family and everything. So we came back. So I went to high school here. Ended up going out to Tech to Wreckham, but ended up moving all the way back here. Initially, I jumped into the startup world, right? And I was at G2 Lytics. Kind of raising money, raising capital, getting a feel for what it's like. I knew AI is going to play a big part in everything. We see that, developing further every day. But once I decided I wanted to get into real estate, one of the things people tell you, appraiser, getting into the appraisal world is one of them. I decided I want to be an analyst and get in on that side. The thing is, I kind of missed the party from 20 to 21, whatever it was, the era of, ZIRP and everything. So I came on with Santander doing multifamily loan originations in April 22. And I think the first rate hike was a month prior. So it was really people getting ahead of the storm. And it was good in a way because we had a lot of deal flow. So with the two-man team, we did about, I want to say 650 million, average deal size, around 30 to 35. So it was really trial by fire. But I really wanted to learn how people evaluate deals from that side. And once, volume started to die down, I really bought into the whole idea of, entering during a down market is the best way to learn. You outwork everybody. And once you make it through to the other side, you should be in a pretty good spot. So I jumped into brokerage in November 22. Partners, they just expanded further out to Atlanta, but they're huge in Houston. I think, they might be second now, but I'm pretty sure they're the third biggest brokerage firm in Houston. We came off from, to open up the new Dallas office, and I want to be the multifamily guy there. So I learned a lot. I learned a lot about how to sell myself. But then, an opportunity came along to where I could work under guys like Nick Flellen, a legend in his own respect, and really just jump into the whole culture there. So learned a lot. I really just gave it my all, and I'm happy to tell a deal story or two, as we move along further in this conversation. But it was crazy in a great way, and it's what led to me, being introduced to Tim Cantrell, coming on here, and yeah, so now we're mainly focused on the multifamily space. We're looking at either buying existing assets or buying notes for assets because we have a vertically integrated approach. We self-manage, we renovate in-house as well, and just given the kind of banking relationships we have, we feel like we're in a pretty good spot. But as you know, Cory, I mean, the market's changing like every day, so I think it's an exciting time.
Yeah, and it definitely is. And there's so much that goes into looking at deals right now. And for yourself, especially when you were getting started, how did you get the skills that you had for underwriting, looking at deals, the acquisitions process? What were some of the things that you were doing to kind of hone those skills and get to a place of confidence to where you're now director of acquisitions?
Mainly just reps. When I came in and I worked under Sam Gold, who, he spent time at Capital One, Arbor, and just really, from a lender's perspective, what's in an OM, kind of what's in the pro forma, and how do we evaluate it on the lending side. So got a lot of reps there. We passed on a lot of stuff, but it's really just, you gotta do it once, see what you messed up, and try to fix it and keep moving on. Moving further from a confidence level and everything, I mean, you just really have to put yourself out there. And you have to be the one that will make that next phone call, that will take the next step, that will show up for, any event, just like we were talking about the other week, the broker event, and just really fully immerse yourself in the ecosystem that you're trying to find success in.
Yeah, and you touched on a lot of things when you were telling us kind of your background. You've got a dynamic range of strengths. What would you say is your greatest strength that you have?
I would say willpower and desire, really, because I mean, in this market, I think we touched on it. I kind of missed the party of that was 20 and 21. So really, it's just having the determination and everything to make it through to the other side.
And on the flip side of that coin, your weaknesses. What would you say is your greatest weakness, and what do you do to kind of compensate for that?
I would say, you have to be patient, right? Especially when you're evaluating deals and you want to make something happen. You want to, make it to that next step, but you can't get ahead of yourself. You have to take a deep breath, look at it from, a zoomed out, frame of view to make sure you're making the right decisions. Because, for the most part, everybody in this industry is moving a million miles an hour.
Yeah, I would. It's kind of ironic that I haven't, or I used to say that patience was probably my biggest weakness because I am incredibly impatient. But I think I've proven over the last 5 years and actually just through my entire
Yeah.
career just how patient I can actually be. In the background, behind closed doors, it can be frustrating, but
Yeah.
everything I know where it's going. As long as you're doing the right things, that patience can be easier done than said in a lot of cases, actually. So when you were talking about your experience with capital raising, right, at the tech startup, what was that experience like? Who were the type of groups that you were talking to? Were these more retail investors or were these kind of some smaller, bigger shops? Tell me a little bit about that experience.
For the most part, I would say more like friends and family, or but to extend on that, family offices. Because when it's a product like G2 Lytics, an AI component that's helping federal agencies kind of address the tax gap and really look for financial fraud too, because there's an angle where it can apply. Maybe there's bad guys, maybe they're cartel related, maybe they're not, and they have this big shipping platform. And they say it's full of something and it's not, and being able to formulate in a way that makes sense, and it makes sense in a way that they can make money on it, because that's why, we're meeting in the first place.
And so what were some of the lessons that you learned in that learning curve going from, because this was your first pretty much career job, is that right?
Yeah, yeah, it
Yeah,
was.
so going from a position of never having raised capital before, and maybe you've heard some lessons and some advice from your father, who's a multifamily developer, but Was that the case? And what were some of the lessons and describe that learning curve for us that you took away?
More than anything, I think I really learned how to take licks on the chin and put the ego to the side. I think that's the biggest thing, but it's also not being stuck in analysis paralysis, not being too hard on yourself. It's putting yourself out there, giving it your best go, and evaluating what you can do better, and then expanding upon that. Because it's easy to kind of stay stagnant or get frustrated, but if as long as you're set on that long term goal and that long term outcome, whatever it is, you just got to keep it rolling.
And was there any real pivotal moment that you can identify that catapulted you forward, or was this just something that you knew you were on the right path and it was a gradual uh, incline to where you are now?
You know, I think every time you don't really realize there's not really a buildup. I mean, I think you continue networking no matter what. You continue having these kind of conversations. Like for me, there's one guy, Rex Womble, based here in Dallas, and he could have gone into commercial real estate if he wanted to. His wife is actually on a very strong team at CBRE, but he kind of pivoted and formed his own way with Wash Metrics, which is in the car wash space. Adding like an AI and the iOS system there to really kind of streamline, the operator's efficiency. And another lesson, I mean, there's also James McElroy at Frenzy, and he's kind of taking over how guys like you and I kind of organize their group travel and stuff like that. So it's just really, I mean, I don't know. Like when it came to partners, there's a guy named Scott Lunine, and he was down in Marcus Millichap in Miami, and he was responsible for kind of turning that office around there. And I ended up just getting coffee with him, and the conversation developed a little bit further, and they decided to open up a new office in Dallas, and I was going to be the lone multifamily guy there and be able to do my own marketing and really just put myself out there, which is what I wanted to do at the time. And you just kind of take a deep breath, evaluate the situation, and be like, this is what I want to do. And I decided it was. So I just kind of took the leap.
And in terms of business development, when you're trying to find new investors or new partners, new deals, what does that look like for you? What is kind of the daily task list for that? How do you approach these types of pipelines? What does your system look like? Kind of give us a little more insight into what that process looks like for you.
Well, I mean, really, the most important thing is your database. It's your researching your databasing, making sure you have the right contact information and exactly what these people are doing, because you don't want to hit them up blindly and just be like, "Hey, what's going on?" and then not really have a clue because they're going to know. So I put the most work into my database, and I mean, it's not easy.
So for you, definitely quality over quantity, right?
Well, I love to have the quantity too. Don't get me wrong, but yeah, it's definitely quality for sure.
So when you were working some deal, is there a story that you have that's kind of on something that was a big challenge for you? You know, an investment experience or a deal didn't go as planned, and what did you learn from it? How did it shape your approach to investing or
Oh,
acquisition since then?
Oh man, well, at Marcus and Millichap, I mean, so I focused on 75 units and under in DFW, and I came on, I believe it was May 2023. Came in hot, because they did a great job building me up and making me feel like I could, conquer the world. So I did, but I mean, just with bid ask gaps and people's basis and everything there. I was getting a lot of BOVs done, was really filling up the pipeline, but nothing really worked. Nothing really made sense. You lose deals to competitors too. Even getting that first meeting was pretty tough. The summer of 23 was kind of a scary time to be in multifamily. No one really knew what was coming next. It was after you know, I don't know if we're going to see another year like 2021 again. But you just keep applying yourself, you keep putting your head down. And there was one deal in Irving. It was a 77 unit deal in South Irving, 1973 cast iron plumbing. But it was my one where it penciled and it was like, all right, guys, let's go. This is my shot. So I tried to give it everything I have or everything I had. And what that looked like was 100 calls a day, Monday through Saturday. I blocked it out to where I would start calling the East Coast early in the morning. I would switch to Central and then do the West Coast. And the best times to call, if you're cold calling, that is 8 to 10 a.m. and 4 to 6. And I just knew if I hit that benchmark, good things were going to happen. And it was probably a month and a half because talk about timing. We launched the deal right before Thanksgiving and then we awarded it right before Christmas. So not the ideal time. Most people are traveling, most people are pencils down, but I was calling everybody I could. At the time, I know for the central region, at least, I was doing double the amount of activity because at Marcus, they post, how many people, how many calls you made the previous day and how long you talked. And I was doing double the amount of second place. So like, I think my top for the hour, because it's only outbound too. I think my record was like 22 hours maybe of talk time, but that's what it took. And I wasn't really sure how it was going to go until the very end. Because we got a great price per door and everything there, but I ended up breaking the record for activity, or so I was told, with over 50 offers, and I did 40 tours in the span of like a month between Thanksgiving and Christmas. So that's kind of been my totem pole, and I probably won't ever stop talking about it. But I worked so hard to get to where I was, and that was my one shot, and then I tried to give it everything I had, even more so, and it really paid off.
Yeah, I mean that's just a testament to what you said your biggest strength was, which was your willpower, that hustle. And I definitely relate with you on that. Like my hustle, my grind, my work ethic is definitely one of, if not my greatest strengths. And just being able to go out there and just do when you don't have anything else at your disposal, to be able to do more output than anybody else. For anybody that is trying to get started and you say, oh, I don't have the resources, I don't have the family connections, I don't have the deals, you just got to go out and find out what you can do. That's a numbers game. And that's a great way just to get started. You're going to work, but it's going to pay off in the long term. And I've been there with you, just putting those numbers up. Just last month we've got 1,000 people, 1,000 investors in our database, and I texted every single one of them individually on my phone. And that's way faster than making calls. And I did do that. It was only 700 people at the time. I called everybody, but this 1,000 texts, calls, emails, being as personal, because I'm a high touch guy. Like I try to make everything as personable as possible. I don't want to just be another operator, another syndicator, another text. I want people to respond to the things that I'm doing and show and recognize the care that I'm putting into it and the work that I'm putting into it. And they do. And it comes through like that. And so when you are putting forth that effort, it shows out. And congratulations to you for getting all that done. I mean, that's incredible.
No, man, Corey, I appreciate it. But, some people like to think that hard work and everything isn't as much of a separator, but I 100% disagree. I think you see it when the going gets tough, like especially like how it is right now. There's people still working hard and there's people that aren't.
100%. Yeah, having that first one in, last one out mentality, especially when you're getting started, is a huge deal. Kind of taking a step back, just on a general lesson on the acquisitions process. Let's just do an example for like a multifamily property. What does that process look like from beginning to end, due diligence, all that stuff? What does that, for somebody who's not familiar with this, can you kind of walk them through that process, what that looks like for a commercial real estate transaction?
Yeah, sure. So taking a step back, the most important thing is probably location, right? You want to be in a good location. If you're getting started, you might not be looking for the Class A stuff or the higher end B stuff. So if you're looking for a Class C deal, you want it to be in a good area with, preferably great schools. But going in, I think another good, you want to build the relationships with brokers. You want to build relationships with people coming in to where you have the support, crew that's willing to help you out. Maybe you have mentors, maybe you don't. But it's better, the more you have, the better. But when I'm looking at a deal, it's kind of like, okay, so what are the mechanicals? Is it cast iron plumbing? Is it individual HVAC? Is it flat or pitched roof? Is there a pool? Just stuff like that. Is there any deferred maintenance? How's the parking lot look? Really, what's the vibe check like when you're driving this deal? And what's your tenant profile too? Who lives here? What is their day to day like? And because you also don't want to come in and do a bunch of upgrades and do a bunch of stuff that's not for your tenant base. You don't want to overbuild to your tenant base. But when I'm evaluating your deal, it's stuff like, okay, so what do you have to do to raise income? How do you cut expenses? What's your renovation budget? If we put in this amount of money on the renovation budget, how much is that going to get us on the back end? Because we're mainly cash flow, cash on cash buyers, right? We like to come in, do a bunch of work, about 20 to 40,000 a door per unit. And once we fix it up, because for the most part, we're probably going to put bank debt on it, lower leverage, and we get those higher rents. It might take a year or two, and then we'll refinance an agency. But not really trying to jump into it that far. But another thing I look at is what's the AMI, what's the average median income, what kind of people live here. And then, yeah, I mean, I spend a lot of time looking at water heater stuff, boiler, is it copper wiring, and kind of getting into the nitty gritty too.
Yeah, so you're heavy on the systems.
Very much so. Yeah. Yeah. Very much so.
And why is that?
I mean, really, I think it's because it costs a lot. I think one of the narratives right now is NOI is going down because rents are staying stagnant. Occupancy is a little tough as they deal with the supply surge. But just for us on our end, I mean, it costs about 5,800 a door to put in just new black appliances. Flooring is up to $2 a square foot, paint $1.50. We're even, it costs even $300 a door to do the ceiling fan rewiring that we do. So, I mean, one of the things I've really noticed since coming from the brokerage side and everything is what exactly is a capital expenditure and what isn't. Because, really, if we're looking at, let's call it, we're mainly going after 1980s, 100 units and under. And I would just say, I mean, this tenant profile and this property profile really, because it's kind of hard to put third party management in there too. So we're looking at, if it's a 70s, if it's a 40, 50-year-old building, it's not so much right now about keeping the party going. It's about how can we maximize and extend the life of this asset, to its fullest capability.
And when you're underwriting, what's your buy box look like? You touched on it a little bit, kind of class C, class B minus type of stuff, sub 100, uh, good location, and but in terms of returns, what are you underwriting for? You mentioned cash flow.
Yeah, yeah. So cash flow for sure. Because typically, we're a little bit, we're a little bit different because we only use our principal's equity. And different buy groups, everybody underwrites a little bit differently, but it might be different sources or costs of equity or debt. Different sources of income, whether it's acquisition fees, management fees, stuff like that. People have different risk profiles too, different yield requirements. Maybe even a 5-year hold versus a 7 or a 10, right? For us, it's for the most part we don't exactly sell. We have before here and there, but we're mainly looking to buy this deal and hold on to it, and hopefully it prints cash.
And how does the business model change when you're dealing with a principal led business instead of, in my case, mostly syndication and other family offices? What are kind of the key differences between a couple of those groups and the main one between having a principal led investment company?
I would say it's more about capital preservation than capital growth. I think would probably tie it up nicely.
Yeah, and I think that's the best answer because everything else is so focused on, how can we generate the highest returns with the lowest risk, where principals are more concerned with the safety of their capital and moving things at a steady pace, and in turn taking, not necessarily lower returns, but are able to take a little bit lower risk and in that approach. So how has the investment approach changed over the last couple of years?
Oh man, I mean, so on our end, we're definitely not as much of a positive Peter. We think that prices still have a ways to come down a little bit. Um, I mean, 5 years ago, it felt like the party was never going to end, or so I've been told. So really, now it's making sure that because I've seen, I'm sure you have too, but I've seen some buys that I'm not really sure. They might be a little bit of an eyebrow raiser. We're very much on the defensive, and we're trying to figure out. I mean, we're much more conservative, and just making sure we're buying a good deal.
Yeah, the
And
the
I think,
mitigation of risk is just knowing what is a good deal, what is a bad deal, saying no 100 times,
oh
99
yeah,
times just to get to one. It's not about deal volume, it's about doing the right deals, and it's not about the deals that you do, it's the ones that you don't do.
very much so. I mean, in my 6 months, I came on right after Labor Day. I think I've evaluated, I think about 350 deals now, and we've closed one. So it's just part of the game, and you have to love it.
Yeah, and you have to get that experience of looking at all these deals, knowing what to say no to, and in order to know what a good deal is, because there's just, especially now in the industry, there's just so much risk out there in the markets, capital markets, the cap rate changes, investor sentiment, where the economy is going, macro, micro, local, everything is changing so much, where traditionally, you buy in a city, the city's not going to change that much over the course of 5, 10, 15 years. And recently we've seen in the last five, obviously, how much locales can change so quickly. I mean, millions of people moving from one area to the other all across the country.
Definitely. But I think it's another good reason for, us to be kind of more Texas based too, because the market will come back. It's just, we're in this kind of tough part of the cycle right now.
Yeah, and speaking of markets, what are some of the emerging markets that you're paying attention to? Is there any new areas that you've kind of discovered that are possibly some lesser known markets? Everyone's looking and familiar with Austin, DFW, San Antonio. Are there any other areas that you personally look at or your company looks at?
Not really, because we tend to stay close to what we already own. So we have a portfolio of 37 assets that kind of spreads up to Sherman, then goes down to Waco. East Texas, I mean, we don't own out there, so we're not really looking out there. But I've heard some great deals coming out of like Tyler, Texarkana. But then for the most part, if I'm going to events, I'm talking to other people that are looking at other markets. I would say Nashville, like South Nashville, and also Ohio too. I know Columbus is a really strong market. I would say that kind of the Midwest gateways are kind of, when you're looking through and going through the headlines and everything, uh, they seem to be doing a little bit better than the Sun Belt. But there's also North Carolina. I mean, there's some strong sponsors here that have gone into that market as well. But Florida, I don't know about Florida right now because of insurance premiums and but the fundamentals are there. So Florida's probably worth looking at as well.
Yeah, and when you're looking at different markets, what is kind of your tell of a good market, bad market? How do you select your markets?
Uh, I mean, so I love the fundamentals of DFW. Population growth. People are going to continue moving here. I think it's showing at some point down the line, either us or Houston are going to overtake Chicago's the third largest metro. So that I would say that's typically what I look at. I would say net migration.
So let's move to negotiation. When you're in the acquisitions process, you're meeting with owners, you're starting to move things down the pipeline. What does a typical negotiation process look like for you? And what are some tips and experiences that you've had that have helped close deals, get better deals? Kind of dive into that.
I mean, I would say a personal touch does matter. I mean, right now, where we are in the market with CIC, sometimes our number can kind of be our number because we think we can come in and know how we're going to operate a deal. We know what our expense ratio looks like, which is admittedly a little bit higher than what's typical. I think most people that are raising capital and getting more aggressive than we are. Um, I mean, shoot, I'm losing my train of thought a little bit, but um, when it comes to acquisitions, I mean, I guess really it's gauging motivation for one. How likely are they to move to the next step? What's going on? Why are they selling? One of the biggest questions I always ask is, okay, so why are they selling right now? um, and going from there. And really for us, I mean, when we're negotiating and everything, is that we're guaranteed that we can close, So if we can agree on a number and hash out the details for DD and everything there, for the most part, that's one of our strengths.
And I've touched on this in another interview with BB Fury, talking about the LOI and the PSA stipulations that you kind of front load into your due diligence. Certain allowances and timelines and things like that. What are some of the common uh, stipulations that you put into those PSA agreements so that due diligence is easier, communication is easier, and everybody stays on the same page as a deal could potentially get pretty hairy?
For us, we're not really evaluating as much. I will say on the brokerage side, we've come across a couple of hiccups with some of the mechanical kind of components, whether it's the wiring or HVAC or whatever it might be. So stipulations, I mean, it's almost like you're preparing for a retrade in a way. For us, it's kind of like, I don't know. For the most part, if we like a deal, we tour the deal. We know how old everything is, and we should already have an idea of how much we want to spend. So for the most part, if we're going to contract, it's kind of like we can close in 15 to 30 days.
Gotcha. So you're not doing so much on the retrading. You're trying to stick to as much as a smooth, quick process and front loading the due diligence before you even get to that point.
Pretty much, yeah.
Gotcha. No, and that does make for a very smooth process. You're going to say no a lot more, but you will save money and time by not getting into deals and jumping out of deals and potentially muddling some of these relationships with these owners. Because I'm sure you're
I,
dealing with a lot of people who own multiple assets, right?
Absolutely. I mean, the relationship aspect is something that I'm always, always, always thinking of. And, retrading, it happens. And sometimes it's good reason, sometimes it's bad, but it's always, no one wants to deal with the retrade.
Right. Yeah. Unless, there's a big ticket item that comes up that you just weren't prepared for and it's kind of got to be
Yeah.
addressed, then that's, I'm pretty on the same page with that in my acquisitions process and how I look at things and approach the negotiation timeline. I want to do the best job possible so that I'm not nickel and diming. I don't want to go after this and this and this. And I've been in so many transactions where I coach the buyers. Say, hey, we only got to take health, safety, and way big ticket items that aren't going to be covered by anything else. Everything else we need to just move away from and not
Oh,
worry about.
yeah.
We should know that these are going to be apparent based on, like you said, age, system, all the upfront information. But that is a good segue into how you deal with owners, how you speak with owners. How much of that are you doing on your day to day, or is that kind of another job duty for somebody else? How much are you speaking with the owners?
No, I'm talking to owners every day. I'm talking to brokers every day. Preferably, we like to use brokers, but we do go direct as well. It kind of depends on the owner profile too. Are they more mom and pop? Are they a syndication shop that's been around for a while? So it really kind of it can vary a lot in your approach. But for the most part, I'm always trying to gear up how am I approaching them to kind of develop that relationship. Because if you're just getting started, I mean, you better be wanting to do this for a long time with that long-term, outlook.
And when you're meeting new brokers, new owners, what are some of the things and strategies that you use to kind of break the ice, get their guard down, and start working towards building and starting that relationship? And to supplement that, how do you keep the relationship going? What are some of the things that you do to maintain these relationships?
Yeah, I mean, it's always good to find some common ground, like you and I. I love that you're a Lubbock guy. Not just tech. It's easy to, it's good to find common ground wherever. But I mean, it could be multifamily itself, right? And what you're reading, what you're learning, kind of what you're focusing on as you're developing your thesis and philosophy on how you want to go about it. But I would say following up is something that not a lot of people do as well. So it's not just getting that first meeting and being, or whether it's a broker, oh, I'm going to send you all this stuff, and okay, great. I mean, you got to stay on them, and you also have to be focused on how you can provide value to the other person too. I like to give before I ever ask or even think about asking, if I can take something. I think you're always selling yourself too. So you have to think about, how am I selling myself? And one of the things I learned from Marcus and Millichap is the punchline is always the same. So if I'm approaching in the role I'm in right now, is what do we specialize in? Okay, we specialize in value add multifamily, the kind of B space. We've been in the C space. We have a couple Class A deals, this and that. But then I say we have a number of this many similar assets in the area. Maybe I'll go into units or the vintage. We have the relationships. We know who just bought this deal. I am a dog for comps. Like, I like to know everything that's going on in the market. I know who likes to work with who. And then I also just sell myself as we're experienced buyers and operators. Expanding on that, my activity levels, I like to say, just like I did earlier, I've evaluated 350 deals or however many it is now. We've closed on one that we really liked. It was a home run. But it's also another Marcus thing is, why me? Why the company? And, for how it applies to me now is why to work direct, or whether it's a broker or what, or, whatever it might be. Another one is a feature, advantage, benefit. So a feature of us is we only use our own funds. So an advantage and benefit for us using our own funds is we don't have to go out and raise the equity. Like, if you're in a tough spot right now and you need to close, you're bleeding money into this deal and you're just ready to get out, hey, we can close in 15, 20 days if you want. But I also, if I'm meeting with someone, maybe it's the first time, or maybe it's a phone call, maybe it's a cold call. You want to ask at least 3 ripple questions, which is, it kind of just keeps the conversation going. And really, it's kind of going off of, kind of winging it in the moment, based on whatever they say. But the goal is to keep them talking, and asking questions, and like you just said, follow up, and keep building that relationship and keep providing value.
Mm-hmm. And when you're networking with owners, brokers, what are some of the keys for keeping the brokers sending you deals and making sure that they are on the same page as you are? Is it something that, because the deal structure and what your buy box looks like can change pretty frequently. What do you do to maintain information with them and make sure that they're sending you the best deals? And how much of the deals that they're sending you, are they off market, brand new? How do you get them to send you a deal right away?
So right away, I mean, it helps that I get to piggyback off my principal, but for the most part, I say feedback. When I was dealing with a broker, or when I was in brokerage, one of the most annoying things is that if we sent them something, or maybe it was on market, maybe it was off market, we have a certain whisper. Maybe it's just, hey, so these guys would sell, but it would have to be at this number. If you're not close to that number, it doesn't really matter, because for the most part, like, the broker's job is to let the market speak for itself. So always give feedback, and really, it's just like we've been touching upon, stay on them. Don't think like don't worry about bothering them. Don't, like, you have a goal, and you have, like, what you're looking to accomplish in your own mind. So don't let any mental block keep you from, achieving those goals. So I would say feedback, staying on them, and following up and doing what you said. Doing what you say you're going to do.
Yeah. In terms of, your daily duties as an director of acquisitions, what does your routine look like? What does your average day look like? What are some of the repetitive tasks in your schedule that you do to stay productive and to stay on task and to accomplish these goals?
Oh man, well, I would say fitness for one. I mean, I really try to take care of my body and mind, but I do a lot of planning. I mean, sometimes if I'm BSing with people, I'll say that I haven't taken a day off in I don't know how long. My mind is always on this, but it's planning ahead, having a schedule, having weekly goals, having SMART goals, and staying on that. But day to day is it can vary. But I like to get in front of people. So I'll have breakfast meetings, lunch meetings, coffee meetings. I'll definitely have a deal queue for deals I have to underwrite. I have outreach for, cold calling owners. We do email blasts. We do our Cantrell report. And just, it's not easy, but you have to just give it your best effort at, doing as much as you can, but also staying organized enough to the point to where, as you get busier and busier, you don't end up, with the whole scattered brain.
Yeah, and it's easy to do, especially as you get higher up in your career or higher up in your portfolio. You have more properties, you have more response, especially when you're like myself, just one man team or a couple other people helping out. It's easy to get bogged down in the details of everything. So a proper structure is really important, and it's got to be goal driven. Otherwise, you're just going to be doing random menial tasks that aren't of the highest importance, highest priority, things like that. And so when you're setting your goals, how do you set your goals and what are you currently focused on specifically?
So goal wise, so SMART goals. It's another Marcus and Millichap thing. It's specific, measurable, attainable, realistic, and it fits your timeline. So I set a couple goals, whether it's maybe I have a deal queue, maybe I don't. So right now, I had a big week last week to where I think we went through 15 to 20 of them, and this week, I mean, it's kind of on me to, we need to keep it going. So I have goals because I have a full list. I have brokers' emails, work lines, phone lines, right? And I might prioritize a few of them. Maybe I owe a follow up to someone I talked to last week, so they'll be at the top of the list. Um, and then I'm always evaluating and looking at which owners and trying to go down the list of exactly what they're doing, what's their timeline, are they open to selling? If they are open to selling, what's the window? What's their price? What's their motivation? Um, and like you said, Cory, I mean, it's not easy. You have to focus on. It's kind of like if I'm applying a brokerage principle, it's the highest. Like what activity are you doing that's the most likely to get you paid, right? So what you have to prioritize in a way of, if you're an acquisitions guy, what's you know the most effective and efficient way to get deals across the finish line.
And is it worth it as someone in really any role, especially in a role like yours? Is it more important to kind of treat everything equally and balance as many plates as the best that you can to your ability? Or is it more important to kind of prioritize one aspect and say, I'm going to be known for this. I'm going to be the best at this. No one's going to have to worry about deal flow. I'm always going to have deal flow. Other things may fall a little bit to the wayside. I might have to pick up some slack or get some help on it. Or is it kind of a better approach to say, I'm going to try and manage everything at a very high, very reasonable volume and try and play level playing field that way?
No, you definitely want to play to your strengths. I think it's very easy to get lost and get scattered. For me, my strength is deal sourcing. And having the great team that I do. We have an asset management team that I can go ask questions. We have our principal Tim, or if I'm looking at, hey, for this renovation on this type of property, this floor plan, right? Like these units are a little bit smaller. It's kind of like one of the questions I asked earlier on is for renovation budgets. So I was looking at a deal that, the units were like 350 square feet, right? And if we're typically putting 20,000 a door into this, like, typically like one bedroom's like what? They're like 650, 750 square feet, right? So in my head, I'm like, this is kind of loose, kind of almost dumb, but can we technically like cut this renovation budget in half? And no, you can cut it down a little bit, but the whole thing is all these units, they still have a kitchen, they still have a bathroom, and that's kind of where, the biggest chunk of the capital costs come into play.
And so as we kind of wrap up the interview here, getting more into, why are you doing all this? Because you're working hard, you've come a long way, you've done a lot of really impressive things. Why are you doing all the things that you're doing? What is your why?
My why, I mean, man, I love the game. I love the competitive aspect of it. I think it's a great way to build wealth. Being very fortunate to be in DFW, and I just really enjoy it. So it's one of those deals where it's almost like a limitless ceiling. So I'm determined to just work as hard as I can and see where it takes me.
And what would you say is the biggest lesson that you've learned in whether it's real estate or business or just life in general?
Uh, Putting the ego to the side, putting the ego to the side for sure. And, in this market, we'll see how long it really takes, but you, sometimes it can feel like it's going to take a while. Like summer of 2023, it felt like it was going to take a while, but it's having the determination and the willpower, like I said at the start of this, to kind of see it through. But I've taken a lot of licks on the chin as well. So it's just building character, I guess, right? I've had a whole lot of character building.
Yeah, and I mean that's pretty much why I named my company what I did, and it's named after. I hadn't told you this yet. It's named after the skate park that I grew up going to all the time in
Nice.
Lubbock, actually. So it was called 1919 Skate Park, and that was I went there forever. I skated since I was really young, and so I was probably skating there for I don't know as long as it was open. It was open for probably 8 or 9 years or something like that. And that was, it's a testament to perseverance, grit, passion, getting up every time you fall down as quickly as possible and getting right back to it and never giving up. So I relate very much to that mindset and that sentiment. On your resources and your tech stack that you use for your business, what are some of the tools that you use every day? What are some of the you mentioned a lot of AI and coming from a tech background and startup background, is there any good tools that you can give that are hot tips to the listeners that everybody can go and check out?
Man, I use a lot of Chat GPT and Grok for the most part. I know there's a lot of underwriting platforms that people can use too. I think on an enterprise level, you could look at Red IQ, but there's plenty of others that are more beginner friendly, I think, and not as expensive. But really, if you're starting out, you might not have access to CoStar. But if you don't have access to CoStar yet, through broker relationships, you can still, get reports or underwriting reports and stuff like that. So lean on your relationships, but you can also get, Crexy for one, LoopNet, RCM. I'd say is really where I spend most of my time. Yeah, I would say I use a lot of CoStar, Yardi, and then those others.
Very good. And these are not real estate related at all, but if you could go back in time, give yourself advice, at what point in your life would you go to and what would you tell yourself?
Oh man. I would probably go back to, honestly, I might have just jumped into multifamily right when I could, or jumped into commercial real estate as fast as I could. I wish I put more of an emphasis and got, maybe I should have known Professor Harrell some more, right, like you did, and got involved in the ecosystem there. But as a student, if it's a student listening to this, jump into it. And it's not cringy, it's not weird. Like guys like us, like we want people that are being purposeful in their actions and are taking the steps, in order to get to where they want to be. So take action and be purposeful.
Wonderful. I love that. And any other last minute advice that you can give, any other topics that we maybe didn't touch on that you would like to introduce, or any golden nuggets to cap off the interview?
Well, hey man, we're in the market to buy deals. I brought this up to Tim, and he was just like, "Well, as long as they make sure they know we're in the market." But hopefully, just hopefully the bid ask gap comes in a little bit, and brokers, if you're listening to this, please talk them down some more. We think prices need to come down a little bit more to get it going and get everything flowing again. Because again, we're very blessed to be in Texas, and we're all going to get through it. So. It's just putting in the work to get there.
100%. And brokers, if you're still listening, you want to know how much to reduce that bid ask gap. It's about 30%. Let's start there.
Yeah, yeah. I wasn't sure if we wanted to really dive into that, but yeah, it's an interesting time for sure.
Yeah, I've got a spreadsheet of every property that I underwrite, and I track how much they asked and how much I could offer, and the average is 41%.
Yeah, we're pretty much right there too. We're pretty much right there. Class C stuff, man. I mean, the party just it got insane, and people were paying four caps for 70 stuff with all this plumbing and everything, just thinking that it was never going to end, and not exactly worried about making money in the short term, right? Because it's just, values are just going to keep appreciating, and we're going to see. We're going to see. We're going to see what the lenders do. We're going to see if push comes to shove. Because right now, lenders, they're trying to offer, at, pretty much close to par LTV, like what, 90, 95% for 2-3 years at like SOFR plus 300 or SOFR plus 200, excuse me. And I don't really think that gets it done either. You see other sponsors coming in and opening up pref funds for their own deals. And, multifamily, it's kind of like the wild, wild west in some ways. But, I love it. I love it. I wouldn't be doing anything else.
Yeah, and I would say that the bid ask have gotten even higher in the last year, which is something I didn't expect to happen. I've seen even crazier prices than in the heat peak of the market. I don't know what's going on that end.
You and I both, but for the most part, I mean, if you're buying in Texas and you're well capitalized, hopefully you'll be okay. But for those that aren't, you can call me and Cory, right?
That's right. We'll buy your fire sale.
Yeah, please, please.
Well,
I'll give you
Harrison,
myself.
thank you so much for your time today. I really appreciate it, and loved having you on as a guest. I think ton of great information in this show, this podcast, and thank you very much for being on today.
Cory, I was really excited to do it, man. It's my first one, so this is awesome, and hopefully we can build on it.
First of many. Harrison, thank you so much. Thank you, everybody, for listening. This is Cory Mortensen with the Mastering Commercial Real Estate Podcast. We'll see you next time. Well, that's a wrap for today's episode of the Mastering Commercial Real Estate Podcast. Thank you so much for listening. If you enjoyed the episode, go ahead and give it a like, leave a review, or share it with a friend. It really helps us grow and reach more people who want to master this space. If you have any feedback or ideas to improve the show, reach out, leave a comment. I'm always looking to make it better and tell us what you like or didn't like. And don't forget, if you're ready to start investing passively and want to learn more about upcoming commercial real estate deals, head over to ONE-9 Holdings. That's 19 Holdings, and join the investor list. Thanks again for listening, and I'll catch you on the next episode.